Here is the overview of today's gold market news. Gold price movements and outlooks. Factors influencing gold prices. Federal Reserve rate cut expectations. U.S. economic data influence. Consumer confidence data and contributing factors. Market dynamics and reactions. Let's have a look at the recent gold price movements and outlooks. Gold prices are currently holding above $2,600 an ounce and have reached a historic high of $2,572.81 per ounce. Prices have hit new all-time highs above $2,550, with an intraday high of $2,587.70 set a new historical benchmark for both price and closing value, nearly 1% increase on the day. Gold to US dollar exchange is trading at $2,552 after rebounding from a daily low of $2,511, representing an increase of 1.67%. Gold futures for the December contract opened at $2,540.60 and closed at a record $2,586.40, marking a net gain of $45.80 or 1.81%. December gold futures last traded at $2,606 an ounce, reflecting a nearly 1% increase on the day. Technical analysis indicates potential resistance levels for gold at $2,575 and $2,600, with support levels anticipated at $2,550, $2,531, $2,470, and $2,450. Here are the latest factors influencing gold prices. Markets have priced in the anticipated U.S. Federal Reserve monetary easing interest rate cut, which is supportive for gold. Global physically backed gold exchange-traded funds have seen consistent inflows, contributing to demand in anticipation of the lowered interest rates next week. The European Central Bank's recent rate cut contributed to a rally in the euro to US dollar exchange, which weakened the US dollar. Let's have a look at the Federal Reserve rate cut expectations. The next Federal Reserve meeting on September 18th could herald the first U.S. rate cut since 2020, which would be supportive for gold prices. Economic data strengthens expectations that the Federal Reserve may cut interest rates by 25 basis points in its upcoming meeting. Analysts suggest that while the Federal Reserve might not act aggressively, steady easing is anticipated to support the slowing economy. The CME FedWatch tool shows a 100% probability of the Federal Reserve initiating its first rate cut since March 2022, with an 85% chance of a 25 basis point cut and a 15% chance of a 50 basis point cut. Market sentiment is anticipating a probability of 50 basis point cut rising from 14% to 35%, while probability for a 25 basis point cut have decreased from 86% to 65%. Moving on. Here are the latest update on U.S. economic data influence. The gold price rally was influenced by the release of two key U.S. economic reports, namely the Consumer Price Index and the Producer Price Index. The Producer Price Index for August increased by 1.7% year-over-year, slightly below the 1.8% estimate, while Core Producer Price Index rose from 2.3% to 2.4%. Both Headline and Core Producer Price Index saw monthly increases, with Headline Producer Price Index up by 0.2% and Core PPI up by 0.3%. Initial jobless claims for the week ending September 7th rose to 230,000, up from 228,000 the previous week. The Chicago Board of Trade suggests the Federal Reserve will cut at least 98 basis point cut this year, down from 108 a day ago. Next, here are the latest consumer confidence data and contributing factors. The University of Michigan's Consumer Confidence Survey score rose to 69 in its preliminary report, up from 67.9 in August. This increase is stronger than the expected rise to 68.3 and marks the highest level of consumer sentiment since May 2024. Improvement in buying conditions for durable goods was attributed to perceived better prices. Consumer sentiment rose for the second consecutive month, up about 2% from August. Consumers expect inflation to rise by 2.7% over the next 12 months, down from August's forecast of 2.8%. This is the lowest inflation expectation since December 2020 and is within the pre-pandemic range of 2.3% to 3.0%. Long-run inflation expectations edged up slightly from 3.0% to 3.1%, but remain modestly elevated compared to pre-pandemic levels. Let's have a look at the updates on the market dynamics and reactions. Gold trading operates 24 hours a day, spanning from Australia to Hong Kong, London, and New York, which supports the potential for continued gains as trading progresses through different time zones. Gold's $45 gain occurred mainly during the morning session, particularly in the 90 minutes before the Producers Price Index report was released, with prices rising approximately $10 every half hour from 8:30 a.m. to 10:30 a.m. Investment banks Goldman Sachs and Macquarie are increasingly bullish on gold, with Macquarie forecasting a cyclical peak of $2,600 in early 2024 and potential spikes towards $3,000. Analysts note that while gold's positive outlook is strong, there could be cyclical headwinds later in 2024. The approaching U.S. presidential election on November 5th could continue to heighten market volatility, potentially boosting gold as a safe haven investment, driving gold prices towards $3,000.